Happy Father's Day to all the fathers. I am going to do a video on how to use the 13 EMA to enter a trade, as well as using the 13 EMA to exit the trade. So the 13 EMA is one of the Fibonacci EMA numbers. So that's one reason why I like to use it. And it's kind of in between the 9 EMA and in between the 21, which gives me that perfect balance. So this is going to be a trade recap for the Lucid alert that was posted, I think Thursday. So as the market opened, we had multiple rejections here at the 16.99 level. So with that many rejections, and also it could not get above the pre-market level here. And also we have selling pressure. We have the Gaussian trend ribbon that's gray, which is red for selling pressure. So as the market attempted 1, 2, 3, 4, 5 times, we have an outside bar here. It tried to attempt to go up one more time. Could not get through. So once it broke this level here on this orb, it's called the, let me give you this indicator. This is the orb overlay indicator. Let me find it. Y'all know I love my indicators. Let's see. It's the opening high low range breakout overlay by Silent Thunder. So the way I trade is it has to be a breakout. There has to be momentum. So once the price broke out of this range here, it broke this low level here of the open. The simple moving average indicator was red. And so I alerted puts at this level here. The puts were 45 cents. They ran to 90 cents. Actually ran to 99 cents, but I alerted the exit for 90 cents. So the way you would use the 13 EMA is break below, and the candle has to break below and hold below this level. So like right here, it broke below the 13, however, it did not remain below. It popped back up above it. So price has to break below and hold below that level for entry. So we had two convictions here. We had the break of the pre-market or the open range low. We had the break of the 13 EMA. We have selling pressure for the third conviction, and the fourth conviction, we have the Gaussian trend ribbon as showing selling pressure. So we can remain in the trade as long as the price never closed above the 13 EMA. So once price begins to break above the 13 EMA, you can exit the trade, or you can use the 21. It's going to depend on your risk level. So some people panic sell. If you're not at panic sell, you can very well use the 21 EMA, which is a fib level, to exit the trade. So here we're below the 13 and the 21. We still did not. We closed above a little bit, but we still have selling pressure. I mean, we can always change our time frame. So once we change the time frame, we can have a little more information. So once we change the time frame, we have the 13 and the 21. So price just stayed around it. Price never closed and stayed above it. So, I love my rectangle pattern. So in this case here, during the stock consolidation, we would draw a rectangle here to see, okay, is price going to break out to the upside, or will it continue to break down to the downside further? So when you're alerting a trade to someone and they're spending their money, you don't want to gamble with them. But if it was a personal trade of mine that I was just staying in and trading along by myself, I would have drew my rectangle to see, is it going to break down further, or is it going to break to the upside before exiting the position? So we got to 90 cents here, which was still perfect, and then 99 cents, not only a little higher down here. But during this consolidation, a little 30 decay happened. So 90 cents, 9 cents, leaving $9 on the table is no real big issue. So that's why I was alerting the exit at 90 cents. So that was about, I think, 100% return on that investment. Let's see if I can show you. I don't know if you're seeing this or not. I have to see how to show more than one screen or more than one area. But the alert was the 1650 put, 45 cents. They ran to 70 cents, and I always try to alert the price they are now once you're in profit. And that was a 48% return, which was way more than enough to exit the position. With buying 5 of those contracts or 10 of those contracts, it would have been a perfectly nice day to end the week. And also, they went into the 100%. So if you're very patient, and if you're very disciplined, you could have paid to the 90 cents to get the whole 100% return. However, 90 cents was way more than enough, and it still was a 100% return, and you could have gotten more than 100 had you held a little longer. So I hope the 13 EMA strategy that I use personally will help someone with their exits, because I know a lot of us, and I know I used to be one of those who would sell quickly. At the time, you would see the price go up, but just because you see the price go up during the phase of one candle does not mean that the entire stock is about to turn around. When the price is below 13 and the 21 and it has broken the open range, you can be rest assured and be confident in that the stock is bearish. So more than likely it's going to continue to fall. Although you have pullbacks because of the algos and the Fibonacci ratios that have orders that are placed there, you can still be rest assured that the stock will continue lower. You can also add the 50. And that's why I like this indicator here, because it has more than one indicator. So if I was to turn on the 50, you would also have more conviction to stay in the trade, because it never recovered the 50 EMA. As long as the stock price is below the 50 EMA, it's bearish. So I hope this strategy helps someone with their exits to hang on longer to a trade to make more money. If you have any questions, please leave a comment below, and have a great Father's Day, everyone. See you in the next video. Bye.